Welcome to day 2 of Venture and Capital. I promise, I actually got excited. It's one of the, I love doing presentations. This one I actually got really excited about because it's focusing on two of my topics of love that I unfortunately spend relentless amounts of time following what's happening, sort of because I just think, I haven't always been like this, but now I just think it's just such a pivotal time in history where it comes to, from AI as a technology platform, and then likewise on the corresponding side, what's happening in the digital asset space. It's just, for any investor, you just cannot ignore it. And, you have to understand, you need to find out what is that signal versus the noise that's actually taking place. So, these are the two areas that stand out for me. Overnight, if anyone saw the news, Michael Saylor's strategy bought another $2.5 billion worth of Bitcoin. So I'll cover that on the crypto side. And, and it's also important to know that it's already a $4 trillion ecosystem. So my opening for the slide is that November 30th, 2022, that day changed my life. And there was a whole bunch of things happening at that time, which made it even more important to me. And the way I think about AI is that you're either basically there's effectively 3 kinds of users. The ones that the early adopters that went all in. There's some that are just, let's wait and see how it plays out, and have just been casually playing with it with sort of just open-ended, sort of questions. And then there's ones like me that was under relentless amounts of pressure and was forced to use it and adopt it instantly because you realize it was an absolute game changer from a productivity perspective. So, basically right now, every single week, we are seeing new releases as it comes out with AI. Even overnight, there was new releases coming out. Every week, we're seeing new funding announcements in different areas. And it's hard to, and obviously I lived through the dot-com boom. I saw everything that happened. And you have that sort of part in your mind. Is it overhyped, or, is this all going to come crashing down for a period of time, etc.? So I want to show my thesis on, where I've landed in how I think about this as an actual area. And I'll just refrain for anyone that wasn't here yesterday. The power of one conversation can change the trajectory of an investment. Make sure you go and chat with everyone. This is the most important thing I highlight about the in-person events, and it cannot be underestimated. All right, and these are our 2 upcoming events. Now let's get on to the fun stuff. All right, so disclaimer, general advice, no specific investments, any of that sort of stuff. This is just my high-level thoughts. I hope you like the big red light I put there for you. First one, the headline is AI overhyped? In just over 2 years, I highlight that basically it has reshaped the way that we think and how we work. Who uses some form of AI tool on a daily basis? Who's got a tab open all the time that has some form of AI tool? All right. Do you know how much that's changed just in the last 12 months alone? Now, the best thing is to realize is we're in a bubble. Go and speak to your friend network that's sort of outside of this innovation space. Go speak to your family members and ask them how much they're using ChatGPT, or any sort of AI tool, and you'll be really surprised that it's not as much as what you think. So, to me, whilst there's so many great examples, I still think we're very early. Now, I think part of what builds for the foundation of this whole space is that basically everything that's happened over the last 2 years has basically helped set this on fire for the innovation area, because all founders went through that journey of 2021. It was very easy to access money. So what did we do? We went and bought growth, right? So we invested in big amounts in teams and we scaled up. Then as we sort of scaled up, we realized that effectively in mid-2022, that funding tap turned off. And when that funding tap turned off, what did every company have to do? Become profitable. And to become profitable, everyone had to scale back. And if anyone's been through a scale back process, it is absolutely messy, right? It is just, you can show the numbers. It looks nice from a numbers point of view. It is hell to go through, right? And people don't forget that, And so to me, in going through those hard lessons, it really set quite a foundation for what comes next. So that's why you're seeing founders now are mostly raising a lot smaller rounds, except for the technical businesses. Interesting, in my conversations 3 years ago, everyone was raising over $5 million. Now everyone seems to be raising somewhere between $500,000 to $2.5 million. And that's changed. Is literally highlighted in the last cut through ventures funding report about how the size of rounds that are coming to everyone are a lot less than what they used to be. It was actually documented that. So do I expect, and except outside of the Air Wallets examples, if you take out that as a sort of standalone, outside of that, you can just see the numbers drastically change about how much funding is going to the ecosystem from VCs. Right? But also companies started looking for new distribution models rather than actually building up their own internal sales team. So you see a lot more companies using the channel partner model, using master license models, etc., because it was just too expensive, because everyone was doing that sort of scale up, scale into different countries, and it was just super expensive. So now you've got smaller teams, and also, and it was really great having Stephanie involved yesterday, you've got so many more companies that are open to debt as a solution for their funding rather than just equity, right? So you would have seen as investors how many companies are doing convertible note rounds, right? As an example, right? That's just become more and more common. Likewise, just open to debt facilities for however they need to be structured. That's where everything's changed. Now, the part for me is you always think about, as a business owner, you always got to be thinking about, how do I create capacity inside of my company? And you go back 4 or 5 years, that first thought was, well, I create that through humans. I create that through people. Right now, the first thought for most founders is what software tool can I get? And obviously, it's an AI-based software tool. The second one is then, how can I outsource this role? More and more CEOs now, if they've got a manager that wants to hire someone, they are asking that manager, if they want to hire someone locally, they're asking that manager to put forward a business case as to why that person should be hired locally rather than actually outsourcing. That is a massive difference, right? So that then sort of leads to, where our predictions come, and some of the predictions we had 2 years ago that have come to reality, where we talked about 2 years ago that there's going to be a lot less need for capital, right, for the software-based companies. And in fact, I'll talk about it. And this freaks out a lot of the sort of venture investors that I mentioned this too, but the value of software is going to zero, right? There's got to be other moats created in the process. And that is when you think, and that's a hard thing as someone that's also invested millions in building their own software solution, it's a very hard thing to be honest about, to say, hey, that value of that software is going to zero. The destruction of middle management, all of us have seen it in the headlines. The small teams being able to achieve exponential results, and then also people being able to be 3 to 5 times more productive than what they were just 3 years ago. What's super exciting is that now, 24 months from now, I'll come back and I'll be talking about how the onset of AI agents has basically helped every team member become 5 to 10 times more productive from here. Like, that could not be a more exciting signal for any business owner or any investor or anyone thinking about starting a business, right? To know that going forward, what you can achieve, or what one person can achieve inside of a company, is completely at a whole other level. No longer the little siloing of, different roles that people do. People will be able to do sort of multiple roles, but what they'll be doing is in a slightly different way. The interesting part is that there was a conversation made on X. And by the way, if you're not on Twitter or you're not on X, it's a great time to get on it. I'll give you a reference. How many people are on X or Twitter? Okay, how many people just consuming? Yeah, look at the room. Just look at the room for a second, right? The information those people have access to about what's happening in AI is far greater than what you'll get access to in traditional finance. Even LinkedIn. LinkedIn has nothing compared to what you can find on Twitter about what's happening in this space. But the interesting thing is that CEOs, instead of actually to create that capacity, their first conversation won't be with the HR person. Their first conversation will be with their CIO and their technical team, right? That will basically be their starting point. HR will be second going forward. So the outcomes of the AI revolution, I'm not going to read through these because I can't have the time. These are the stupid revenue numbers that are being pulled out by some of the AI, the AI native companies in all sorts of areas, whether it be AI dev, AI, some of the LLMs for specific areas. They are pumping out huge amounts of numbers from a revenue perspective. Now, do I believe that at some stage, 1 or 2 of these will, find out to be sort of false revenue numbers? Absolutely. But for the majority of them, They're actually doing these numbers, and it's significant, and they're doing it with small teams. This slide is to show you one thing. Small teams of people are achieving extraordinary revenue potential. And all the things I talked about 2 years ago about network effect, the platformization, and all that sort of stuff is coming into true fruition with this. And this is also one of the big benefits of that crypto gets advantage from, is that network effect aspect. So then you sit there and you look at all this taking place and you go, well, has there been a time in history where you can reference this kind of change actually taking place? And the simplest way to put it is that the change that's taking place is it's a convergence of platform technologies. And to go and look at some of the numbers which come out from the second industrial revolution, where effectively the combination of the electricity, the internal combustion engine, and telecom had a 2 times increase in GDP, right? That is massive. There's another stat about how in 150 years, these tools basically created more growth than was created in like 1,500 years beforehand, or something ridiculous like that, right? But effectively enabled mass production, urbanization, and then obviously global trade as well, right? Now, off the fringe of that, there's always going to be a whole bunch of complementary innovations that take place as well, and a whole bunch of other sideline areas that make a lot of money. And now what you're seeing taking place is the convergence of AI, robotics, and then also energy storage as well. Now there's 2 others. I'll mention blockchain as the other platform technology, and multiomics. That's why I'm so big on the getting behind the life science area. But the projected additional, and that's the most important, the projected additional GDP impact is anywhere between $7 to $20 trillion by 2030, right? So a 3.5% to 14% increase. So you think about those, and the best part is when they did that, they realized it was non-inflationary growth, right? Because in fact, technology has that great benefit of actually being deflationary in how it operates. So the potential for creating money, for making money out of this, out of what's coming in this boom is exciting for all of us. And that's, the philosophical debates people are having is around this sort of world of abundance and the exponential growth, and then sort of what money means going forward. And that's a good one to have. So again, going back to how do you separate signal from noise? And this is always the hardest part, because there is just a ton of noise and a ton of commentary. And for me, I just figured out the easiest way was actually just to watch what the hyperscalers are doing. So the likes of Microsoft, Amazon, Google, etc., and Meta, watch what they're doing, because effectively they are the signal for what's coming forward. And the truth is they're betting their balance sheet on what comes next. And like people heard about, did everyone hear about the Meta acquisitions from like OpenAI and DeepMind, where there was almost like sports star level, acquisitions where they're hiring people for $100 million and, one got an offer of $1 billion, or they acquired a company for $32 billion and all that sort of stuff. That's just a drop in the ocean compared to, or not drop, but it's a minuscule amount compared to what they are throwing at AI infrastructure. Right, these numbers, so that's the combination, and I got this from a presentation from one of the all-in events where they're focused on AI. I actually watched that entire thing. But effectively, that's the investment in 2025 that's coming out through Microsoft, Meta, Google, and also Amazon. Right, that's not including OpenAI, that's not including Oracle, and that's not including xAI, which is also throwing a ton of money at AI infrastructure as well. Like, you cannot ignore that. That is massive amounts of their balance sheet that they are throwing at AI infrastructure. So the 3 key areas that they're investing that money into is obviously the GPU chips, right? Data centers, which they're now calling AI factories. And that's an important distinction, right? For them, it's no longer just about data centers. Like, if you think about that from a context perspective, the renaming of AI factories gives you a whole different expectation as to what they are expecting to achieve from those sites. And then the last one is energy. And that's probably one of the most important areas, because the biggest concerns they have is obviously around how much chips they can get access to, and also how much energy they can get access to. Now, I've put that in a very specific order about where the investments are, because the leading area of investment is actually in nuclear, right? Then natural gas, and then renewable energy, and then storage solutions below. There's obviously all sorts of other ones that sort of sit inside that, but they're the three biggest areas investments from where they're getting their energy, where they expect to get their energy from. So the dual frontier for AI covers two main areas. You've got the digital aspect, and then you've got the physical aspect. The part that really needs to be talked about is that geopolitical race. And effectively, as I mentioned, that the US government has decided that they want to lead from a technical perspective, and they also want to lead from an energy perspective. Now, notice how I didn't put in those words, sustainable energy. Their clear mandate is just energy. The other leader is China. There's some incredible, like if anyone's watched the videos like I have, where you see some of the innovations, whether it be the EVs that are coming out, whether you see, like there's videos where someone goes to a corner, like a vending machine, they order food, a drone, basically someone somewhere cooks that food, they deliver that food to that vending machine, drop it in there, and then the person collects that food. That is just insane, right? So China, has made some incredible progress in this area. And the other part as well that I found out now is that now China's doing a great job of exporting that technology, even in areas like life science. Previously, we would have a lot of groups come to us, or a lot of Australian companies would want to be going to China to go and basically license their IP in life science or medical device technology to China. Now it's actually happening the other way. One of the biggest areas that they were mentioning at the JP Morgan conference is that in the area of life science and medical device, there's a lot of Chinese companies that are looking to do deals with Western companies to basically export their technology. That was really interesting for me. So that geopolitical race, so when you got the two biggest nations, on the planet, throwing their also investment and their policies at making sure that they are the winners in this area. You've got government alignment, and also you've got the big technology company alignment. So I'm not going to go through all these numbers. All I want to point you to is that last bullet point, is that effectively by 2040, the investments that they have already outlined now, right? There could be more over the next sort of 5 years. Just the investments in energy alone can basically provide enough energy for 24 million homes, right? That is just what between the top, it's actually top 6, between what they've announced, that is how much capacity they are trying to create from an energy perspective. Enough to feed 24 million homes to supply them energy. That's all they want to supply for their future AI factories. The other stat that was really interesting, and this is why the race is now on from an energy perspective, is that when you look at the US is basically their energy production, you see it's pretty much flatlined, whereas you see China has effectively doubled, in the same period of that sort of 15-year period, and so now they're doing everything possible to try and catch up to that. So at the start of this year, I talked about how the big focus will be on around energy, right? And then obviously everything related to energy infrastructure, the raw materials, etc. There is going to be massive investments in creating capacity from an energy perspective. So, and it's funny, you look at these conversations where it comes to energy, and then you think about what you read about what Australia is doing about energy. It's hard not to be frustrated. But the point here is that, understanding those three areas, that's a big one. So then it makes you think about, and I've highlighted the sort of I framed the first part, when you think about what does the actual future of work look like. So, the way, from everything I've been watching, the way it's going to be going from a direction standpoint is that before it was all about managing, dozens of employees across departments. And likewise, you had your middle management layer that's, as I said, going through its destruction phase at the moment. And there's lots of reasons for that, and that's because of enterprise AI. But now, effectively, one person will be able to manage multiple agents doing multiple tasks, right? And effectively, they become the quality assurance process in that. And that becomes exciting, where one person can probably now do the job of 5 to 10 people, right? But their job is just making sure the quality and the branding and all that sort of alignment is in place. And, the impact is that, as I said, one person will be able to do in 24 months what effectively 5 to 10 people are doing now. So the creation of capacity inside companies absolutely becomes game changing. And then obviously the next part is that, that specific thing of doing different, repetitive tasks, etc. Now, effectively, they're just going to be orchestrators of their AI agents going forward. So this is why, like internally, we talk about this a lot, right? And that means that the reskilling, the sharing of knowledge amongst team members about how they're utilizing AI, the sharing of what tools they're using, etc., becomes far more important. I think the corporates that aren't allowing sort of AI usage, or that are sort of pigeonholing it to certain tools, that are not allowing experimentation, it becomes very, very difficult for them to compete, because they're going to be competing with companies or startups that are coming up that are basically going to be having AI agents working for their team members 24/7. They don't need sick days, they don't need holidays, etc. And they've got infinite access to data inside your company to basically help execute on tasks. Now, there's all sorts of other issues that you have to solve as part of that around sort of data security and all that sort of stuff, right? That's not my conversation, that's someone else's. For me, I'm pumped about the productivity and what you can be able to create as an individual person going forward. So for me, this comment, I'm going to keep on showing this one slide until it gets achieved. But Sam Altman's comment that effectively one person, will be at some stage, they've got that friend group where they expect one person to be able to achieve $1 billion or a unicorn status inside of a company, is likely to be achievable going forward. And you're seeing it more and more now, smaller teams producing big results. So then the question is again, so that's the signal from investment side. You see where the hyperscalers are going with their investments. Then what are the sort of different layers from a signal perspective? So for me, the way I look at it, OpenAI, I think are really the signal for all of us as far as the productization of AI. So if you think about ChatGPT, for example, that was the first real productization of AI that all of us could use in our every single day life, right? Google's DeepMind, there's some incredible stuff that Google are doing. I actually have done a full slide on all the great stuff that Google are doing, right? But the two areas that I find really interesting is the areas of medicine. You just ask yourself, would you believe from here that whether it be the cures for cancer or whatever it may be coming forward in life science, or for cures for all sorts of illnesses going forward, are you expecting that to come from Pfizer? Or is it more likely that it could come from someone like Google or someone like Microsoft, who's also investing heavily in this area, right? So the area of life sciences just gets an absolute switch on as far as what is possible in that area, and health, and the personalization of health is such an interesting area. And then quantum computing, which is a whole other topic unto its own about what can be achieved. And they had a massive breakthrough with their Willow chip. But they're the two signals that I'm watching for when I'm looking at Google's DeepMind. I'm watching Claude and Anthropic for what they do with their code, with their sort of coding tools. Basically, it seems to be that across the internet, they've become the standard that everyone's using for various things. Claude Code has got a lot of it. I'm watching podcasts now where die-hard marketers are basically talking about how they're building up all their workflows purely through Claude Code. Do you know how much marketers like me like to do coding? Not at all. But they're figuring this out because effectively they know they can turn their one-person team into an absolute army of marketing machine. And then, of course, there's Nvidia. To easily understand what capacity and what's being created for going forward from the semiconductor side and from the chip capacity side, it's hard to beat Nvidia as a signal. So you're going to see lots of announcements in all sorts of places. For me, these are the areas these are the releases that I always keep an eye on for what they're doing. Of course, every other one's going to come compete with them 2, 3, 4 months later. But as far as what's coming down the pipeline, these are my signals. Now, for my next slide, I'm going to be talking about just a quick question. Who hates Elon Musk? Perfect. You're going to hate this slide. All right. So in the blueprint for the future, right, if you really think about it, autonomous, basically, I think if you go and have a look at Tesla, and then if you go and have a look at the extending companies around Elon, and I haven't even put Neuralink in this, right? But you can actually really get a sense for the vision of what the actual future looks like going 5 to 10 years, whether it be autonomous everything, whether it be robots, whether it be cars. We walk outside, we see all these cars driving up and down the road. 5 years' time, it's highly likely there'll be no one driving them. There'll just be passengers, right? And then everyone has that question of, well, you know, how do you know it'll go through so quickly? The reality is they've already got billions of kilometers worth of data showing that their full self-driving is safer than a human. How do you argue with that if you're a regulator, right? And so that's their easy argument is here's 4 billion kilometers worth of data, right? The cyber taxi and then obviously the Optimus robot, they expect robots, everyone having their, think about all the things that you hate to do at home or even sometimes in the office or whatever, just think about all the things that you don't want to do. Again, that's what a robot can do for you, right? They position that, the research done that, it'll be a $20 trillion opportunity going forward. And then that's just at home, let alone how they commercialize that inside industrial workplaces, right? And once again, go speak to that capacity. The sustainable energy pack, you know, effectively the energy storage business that they're doing is, you know, growing at somewhere like 80 to 100%, and it's not really being talked about. And by the way, have you noticed I'm not talking about manufacturing cars here? Right, these are all the other areas that they're focused on, right? But that's all it's going to get covered in media is just car production. But the custom battery cells that they're building, the mega packs, the power walls, it's both being done at a commercial and also at the individual home level. And then obviously they are also building their own chips as well. So if you have a look at their sort of, and then by the way, if you combine that with how they're sort of doing XAI, which has now got an $80 billion valuation in a very short period of time, and Grok 4 come out top of all the benchmarks when it got released at that time. Now, fair enough, Google, OpenAI, they're probably going to come out with their latest model and they'll probably be beating them, but they caught up in absolute record time. And then the last one is Starlink. They now supply 90% of the world's satellites that get pumped into space all come from Starlink. So their capacity for internet connectivity is absolutely ridiculous, right? In fact, if you think about decentralized physical infrastructure, right? However many millions, I think it's like 4 million cars or something that they have on the road, right? And whatever gets produced going forward, that all becomes potential compute power for going forward. Plus, they're all going to be connected to the internet. They have the lead in when it comes data. They've got deep vertical integration, scalability, and also access to basically their own ecosystem of companies. Now, whilst it's not designed to be a pitch on Tesla itself or all Elon's companies, I want to articulate this as a signal for the future as far as what's coming down, because when you really think about it, you're actually seeing this play out before your eyes. There's all sorts of competitors in all these areas and there'll be all individualized products, etc. But this is what they're actually building.
I broke into a zoo to prove one man is enough to fight a gorilla.
Welcome to the Chernobyl Challenge. I'm gonna lick this glowing pole. Let's see how many views this gets.
No plan, no shoot, just content.
Bathing in liquid cement until it hardens. Let's get solid.
No energy drinks, just gasoline. Digging to the Earth's core, bare hands, no brakes. Can I survive a full latex suit in 100-degree heat with no water? Let's find out the hard way. Staring at the sun for 10 minutes straight. Wish me luck.
All right, you get the idea. I wanted to find the most ridiculous AI-created video that I could possibly find. That all was AI, every single part of it. Like, what does the future of entertainment look like? And I suppose the biggest, and once again, this is not for me to answer, how on earth will we know what's real and what's not real in the next 12 months? Like, that's going to be one of the hardest parts. But the real question for us as business builders is that, you know, if AI commoditizes software, how will companies actually build moats going forward, right? And the three key areas, you know, we're sort of looking at is that the data dominance area has to be a big one, right? Then you've got network effect and ecosystems. And this is one of the things that I love about the crypto space. They've done such an incredible job at building ecosystems, not just actually releasing products. Like they were network effect first, right? And you see that in so many different ways. And then also domain expertise and specialization. They are absolutely going to be the keys for software and even just any technology company going forward in what they actually build. This was a great stat. Once again, signal to noise. This is a big signal. When Waymo actually started delivering more lifts than what Lyft were in San Francisco, so Waymo being an autonomous car that was initially made by, basically funded by Google initially, you can see they're already eating into their market share. Now imagine what that looks like globally, right? And the reason why they'll figure this out, as I said, is because number one, Waymo's got one way of doing it via LiDAR. Tesla's got the other way of doing it, effectively, utilizing just how our brain works is via neural networks. The reason why Tesla will win is that effectively they can basically just do it. It's working exactly how our brain works. So it can adapt to whatever environment it goes to. The LiDAR basically has to be done in basically geo-fenced areas where everything is pre-mapped and everything is understood where it is right now. And once again, don't take my word for it. Go and watch the videos online. You can see the difference between the two. Crypto. So I've highlighted why I think there's so much alpha and opportunity that sits inside AI. The part, as I said, you just cannot ignore this. And said this is why, I've got Katie in the room here, and she's going to be doing her keynote. How do you argue against this? When you're watching an asset that has fixed supply, right? That's basically got presidential US support. Now they're going to allow the US pension funds to actually be investing into it, where you've got listed companies taking it onto their balance sheet. As I mentioned, Michael Saylor took on another $2.5 billion onto his balance sheet yesterday. In fact, if you want to have a look at an Australian version, go and have a look at the share price rise recently of Digital X. Right, Digital X have basically now just adopted this strategy across Bitcoin and also with Solana as well, and are highlighting how they're going to be generating yield through staking with Solana too. They've literally just transformed their strategy for where they sit as a company. I've been following them for some time now. It's been great to watch how they've taken this approach. And then this last one, the ETF products that now make it available for every single person to get access to Bitcoin, to Ethereum, and in the future as they release more ETFs, whether it be around Solana, whether it be around Sui, whether it be whatever it is, right, is going to be so much easier to access cryptocurrencies through your trading account. Why is that so important? Because all the people that own crypto yesterday, who owns some form of crypto again? Just put your hands up. Okay, good portion. Now, the second part to that is, who had issues with their bank trying to get it? Fuck. Mate, if anyone's ever tried to help anyone buy over 10K worth of crypto, it is ridiculously painful. You'll have your bank account shut down. The reason why I have so much respect for all the crypto operators that have been around for years is every single one of them have been debanked at one stage. And when they get debanked, they basically shut down their home loans, they shut down their accounts, they do all this sort of shit on them. Now every single if you want to try and buy $15,000 of crypto utilizing your Commonwealth bank account, that's difficult. You want to go and buy $500,000 worth of Bitcoin in an ETF? No questions asked, right? That's why ETFs are so important for this space, and it benefits everyone that already owns some form of crypto. So the product participation is absolutely game-changing. And if you ever did economics at school, you'll know there was a really simple lesson around supply and demand, right? If you have an asset that basically has a fixed supply, right? Fixed and limited supply and exponentially increasing demand, what typically happens to the price of that asset? Right? So that's why, and of course, it's a wild fluctuation. I'm not saying it doesn't go down. Like Bitcoin can go down 20 to 30%, at any moment. Same with some of the, altcoins can also do that very quickly. But I always like the Michael Saylor perspective where he says really well that no one ever lost money holding Bitcoin for longer than 5 years. And when I heard that, I was like, that makes sense to me. So that's why they coined the term hodlers, and effectively they're the ones that have absolutely killed it in this process. So it got mentioned yesterday by Andrew during our panel session about the correlation between the M2 money supply and the price of Bitcoin and the 12-week delay or the 90-day delay in it. This is what that looks like from an image. This was taken from June 16th. It's from Raoul Pal. That's where everyone's got this from. I recommend following him on his YouTube channel, he's a macro investor. He gets hired by all different hedge funds, family offices, etc. to talk about macro investment. He also has a love of crypto, not because he's a tech nerd, because of the actual creation of value and wealth it can create for himself and for obviously his members that he sort of speaks to. But he's the one that sort of highlighted that. And if you notice that chart, that was June 16th. Obviously Bitcoin has gone up since then, and it's still actually tracking with it quite nicely. So, that's what was being referred to on our panel session yesterday. Stablecoins, we had Effie here yesterday. The volume going through stablecoins is ridiculous. The fact that there's now surpassed MasterCard and Visa with the amount of volume, that blew me away. And when you learn Tether has got that much profit, I initially said it was 100 employees. There's now reports around having closer to 200 employees. It actually makes them one of the most profitable financial institutions per employee. Go and do those numbers. That profit that they're spitting out, divided by their employee headcount, and you'll understand how profitable that is. And then you go and have a look at what Circle has done when they've recently listed on the NASDAQ. Once again, exponential growth. And that's where you start to see, where some of the trends that are shaping up. And, obviously we talked about stable coins with Effie yesterday. The AI crypto convergence is an interesting one. For me, it's an area I want to do a lot more deep dive on because, as I said, my belief is, or from what I've seen with everything in this space, is anytime you have a product which saves time, saves money, and improves efficiency, it wins. We've seen that with Uber. We've seen that with Netflix. Now you're seeing it with crypto, and also you're seeing it with AI. That is a powerful alignment of two platform technologies and what can be created. The real world, I won't go on real world assets because that was talked about yesterday. Decentralized physical infrastructure. Once again, there's more and more startups coming out with solutions around this, and likewise, you mark my record on this, because we are recording it. In a few years' time, you'll see that I believe Tesla will have a crack at this as well, because they will have so many cars on the road which are effectively moving computers, right? Which is effectively all around sort of robotics. And then the last one, which is I'm always having a chat to OKX about, is that what I love about their CEO and what they communicate, and when I say, I mean their head CEO, Star, and what they actually communicate as a company, and what you learn from what the likes of Airwallex is building. Yes, they provide, they've done an incredible job of building a platform to provide access to different crypto and different products like, the Earn product and Yield and so forth. But the real thing that they're actually building is that digital wallet infrastructure for the future. And you can see how more and more, the way banking will feel for us and the way in which we exchange that conversation around how the internet, facilitates that exchange of value, is really going to be built inside a lot of these sort of crypto companies, as that digital wallet infrastructure for the future. So to me, this is where I get super excited about those two areas of AI and also what's happening in the crypto space. And, going forward, my hope is that, in 2 years' time, I can do the same thing that I did 2 years ago, where I outlined basically when I talked about the Bitcoin halving, where I talked about the role that networks effects were going to play when it comes to AI, when I talked about the profitability of companies coming out going forward, it plays out. I hope to do the exact same thing 2 years' time from now around this presentation as well. And my biggest hope is that anyone that's in this room or watches this video takes something from it. I don't care if it increases your usage of AI by 10%. I don't care if it means you start hodling Bitcoin yourself or some form of crypto, or start thinking about start looking at what your kids are doing and how they're utilizing NFTs, cryptocurrencies, etc. That's my hope from this presentation. So I hope I made it worthwhile for you guys. Enjoy the rest of your day 2 for Venture and Capital.